Welcome back, everybody. We're diving deep today into a November 2024 report all about the mutual fund industry here in India.
Yeah, a lot of fascinating insights here about investors and how they're behaving and really kind of what's happening overall in the market.
So a lot of data on fund flows, AUM, assets under management, and even something called Folios, which we're going to get into a little bit later.
It's like a window into, people's investment decisions and how people are investing their money.
Absolutely.
Yeah.
So let's start with the most basic question. Where is the money going? The report highlights net inflows into mutual funds hit 60,295 crore rupees in November.
Big number, but actually down a bit from recent months.
Wow.
This kind of dip doesn't necessarily mean anything bad, though. It's just the market, Things go up, things go down.
Yeah, kind of like the tide.
Exactly. Now, if we look closer at certain types of funds, we find some interesting things happening. For example, despite some fluctuations in the market, equity funds, which invest mostly in stocks, are seeing steady inflows.
That's interesting.
It suggests, confidence in the long-term growth of equities.
Okay, so investors are holding steady even when the market's a little bit shaky.
Yeah, and within equity funds, there are some real standouts. Sector or thematic funds, those focused on specific industries or themes, have been attracting a lot of investment, though they have cooled down a little bit from their peak.
Okay, so what do you think is behind that?
Good question. It's something we should dig into a little bit more. And then there are the mid-cap funds. The report shows they're at a 5-year high in terms of investment.
Is this the sign that we should all be jumping on the bandwagon?
Well, the idea of big returns is always tempting, but, past performance doesn't guarantee future results. We need to figure out what's driving this mid-cap surge to know if it's going to keep going. Is it solid or is it just hype?
Okay, so healthy dose of skepticism is probably a good idea.
Absolutely. Now, something I found pretty surprising is the amount of money going into debt funds.
Yeah.
With all the talk about changing interest rates, what's happening there?
Right, that's a good point.
Well, debt funds invest primarily in things like bonds, and those offer a level of stability that a lot of people find really appealing, especially when things are uncertain. They can feel like a safe haven when everything else is volatile.
Yeah, kind of a smoother ride than the stock market roller coaster.
Exactly. And within debt funds, one category is really taking off: money market funds. Their inflows are up a whopping 2.6 times compared to last year.
Wow, okay, so why the sudden popularity of money market funds?
Well, they're generally considered very low risk, and you can get your money out easily when you need it. So in the current economic climate, people want that security, but they also want access to their money if they need it.
Makes sense. It's like a financial safety net that's always there.
Exactly. So for our listeners, understanding these fund flow trends is really crucial for making good investment decisions.
It's like having a map showing you where the money's going so you can navigate the market better.
I like that. Now let's move on to something else pretty interesting in the report. SIPs, or systematic investment plans, which have become incredibly popular in India.
Right. People love those SIPs.
And for good reason. They offer a disciplined approach to investing, allowing you to invest a fixed amount regularly, no matter what the market is doing. And the report shows a record-breaking 25,320 crore rupees going into SIPs just last month.
Wow.
And the number of SIP accounts has now crossed 10 crore. That's a lot of people investing regularly.
Yeah. So it's like building a solid financial foundation brick by brick.
Yeah. However, the report also highlights a bit of a concerning trend, an increasing number of SIP cancellations. So the question is, why are more people choosing to stop their SIPs?
Yeah, especially when they're supposed to be for the long term.
Exactly. Is it market volatility? Or are there other things going on? We need to understand that.
Yeah, it's like we need to look into the minds of investors and understand their hopes and fears.
Exactly. Now, to see the bigger picture of the mutual fund industry, we need to look at AUM, or assets under management.
Yep. Okay, so paint the picture for me. What's the AUM looking like?
Well, the report shows a remarkable new high-rim. Total AUM has reached a massive 68.08 lakh crore rupees.
Wow.
This shows just how big the industry has become and how much trust investors are putting in mutual funds.
It's not just numbers, right? It's about all those people putting their faith and their financial futures into these funds.
Absolutely. Now, if we break down the AUM by different types of funds, we see some interesting patterns. Equity AUM is way up, probably because people are more interested in equities. Debt AUM is holding steady, likely because of the perceived stability. And hybrid AUM, which combines both equity and debt, is growing steadily. Looks like investors are diversifying.
Smart move. But one thing really stood out to me in the report. The AUM for actively managed equity-oriented funds is more than double that of debt-oriented funds.
Interesting, isn't it?
Yeah. What do you think that tells us about investor preferences? Are they becoming more okay with risk?
That's a really sharp observation. And it brings us to a deeper level of analysis. Looking at AUM changes adjusted for fund flows. This helps us see the impact of market gains or losses, separate from the money flowing in or out of the funds.
So we can see what's really driving AUM growth. Is it actual investments or just the market doing its thing?
Exactly. And what we see is that both things are happening. Market gains have definitely been boosting AUM, especially for equity funds, but investors are also actively putting money in.
So it's like a plane with two engines. The market is one engine and investor confidence is the other one, and they're both pushing the industry forward.
Love that analogy. Now let's get into some specifics. We see small cap, mid cap, and multi-cap funds are enjoying some of the biggest gains, likely because of how well the market is doing.
So what's fueling that growth in those specific areas?
Well, it could be that people are willing to take on more risk as they see the economy growing, or maybe there's something specific about those parts of the market that's attracting investors.
It's like a treasure hunt trying to find the hidden gems in the market.
I like that. And don't forget about those money market funds. They're not only getting lots of investments, but they're also doing well in terms of returns.
Yeah, they're riding a wave right now.
For sure. And it's a reminder that even with those so-called safe investments, the market still has a big impact.
Absolutely. So whether you're a seasoned investor or just starting out, it's so important to stay informed and do your research, understand what's happening in the market.
Couldn't agree more. Now let's shift our focus a bit and look at the human side of this whole thing. The report highlights the growth in what are called folios or investor accounts.
Okay, folios.
Yeah. These folios give us a glimpse into who's actually investing in mutual funds. And the report shows a new record high of 22.08 crore folios. This means more and more people are getting involved in the market, which is great.
That's fantastic. Each one of those folios represents a person, a family, someone with dreams and goals. They're trusting these funds to help them achieve those goals. That's powerful.
Yeah, it is. And if we look at folio growth across different types of funds, we see that equity and hybrid funds are doing really well, showing that people are becoming more comfortable with those market-linked investments. But debt fund folios have actually gone down a bit. So why is that? Are investors changing their minds? Or is something else going on?
Yeah, it's like a puzzle, trying to figure out what all these pieces of information mean.
And here's another interesting piece. While the average number of new folios added each month has been really high over the past year, November saw a little dip. Could this be a sign that people are starting to become more cautious?
Like they're sensing a change in the wind?
Maybe. Now let's dig a little deeper into how individual investors are behaving by looking at what's called ticket size, or AUM per folio. This gives us an idea of the average amount of money people are investing in different categories.
So it's like seeing how much people are willing to bet on different parts of the market.
Exactly. The overall ticket size has gone down a bit, but it's still higher than it was last year. So what does that tell us? Are people feeling confident?
It's like reading tea leaves, trying to see what the future holds based on these small clues.
Right. Now let's break it down. Debt funds have the biggest ticket size, which means people are putting in larger sums when they choose that category.
Makes sense, since they are looking for stability.
Exactly. An equity fund ticket size is steadily going up, which might mean people are feeling more comfortable with equities as a long-term investment.
So as they get more experience and maybe see some good returns, they're willing to invest more.
That's the idea. It's all about finding the right balance between risk and reward and making sure your investments match your goals and your risk tolerance.
Great advice. So to sum up what we've discussed so far, we've seen some really interesting trends. Equity funds are still popular, even though certain categories like sector thematic funds have slowed down a bit. SIPs are going strong, but we need to understand why some people are canceling them. And the AUM has reached a new high, which shows confidence in the mutual fund industry. But behind those numbers, we have real people making real decisions about their money. That's why it's so important to understand what's driving those decisions and what's happening in the market.
Absolutely. And we've only just scratched the surface. In the next part, we're going to dig deeper into these trends, analyze the factors driving them, and discuss what it all means for you, whether you're an investor or just someone interested in the financial world.
Stay tuned, everybody. There's lots more to uncover.
Exactly. We'll be right back. Welcome back to our deep dive into the mutual fund industry. Last time we were talking about where the money's flowing and you know how many people are investing. Now let's see how those investments are actually doing.
Yeah. Are there certain types of funds that are like consistently beating the others?
Sure.
The report mentioned small cap, mid cap, and multi-cap funds doing really well because of the market. Are those the ones to watch right now?
Well, they've definitely been getting a lot of attention. They have been outperforming other types of equity funds for a while now, which is part of why we're seeing so much interest, especially in those mid-cap funds.
But we talked about, not getting too caught up in past performance. So how do we know if this trend is going to last?
Yeah, that's the key question, right? Market conditions can change quickly, and what's hot today might not be tomorrow. We need to look at what's driving their growth to figure out if it's based on something real or just hype.
Right. So don't get ahead of ourselves.
Exactly. Now, what about debt funds? Anything exciting happening there?
Yeah. Are there any stars in that category?
Well, remember those money market funds we talked about earlier? Not only are they attracting tons of investments, but they're also delivering good returns. They've been performing really well compared to other debt categories, which makes them even more appealing right now.
So low risk, easy access, and solid returns. No wonder everyone's jumping on board. This really shows how important diversification is, right? Spreading your investments around helps manage risk and could even lead to better returns.
Diversification is absolutely key for a strong and balanced portfolio. It's like building a house with a solid foundation and different rooms for different needs.
Speaking of building a foundation, let's come back to those rising SIP cancellations. Why are people stopping their SIPs when they're supposed to be for the long haul?
Yeah, it's a bit of a head scratcher. You would think that with all the benefits of, rupee cost averaging and the power of compounding over time, more people would stick with them, even when the market gets a little bumpy.
Right. Well, there are a couple of possible reasons. One could be just plain fear, driven by market ups and downs. When things get rocky, some investors get scared and pull out, even though staying invested is usually the better move over time.
Yeah, it's that classic emotional roller coaster of investing. Fear and greed can really mess with your head sometimes, even if you have a good plan. Exactly. And then sometimes it's just life happening. Unexpected stuff like losing a job or sudden medical expenses can force people to change their financial plans, even if they still believe in long-term investing.
Yeah, life has a way of throwing curveballs sometimes, and you got to adjust. But
Yeah.
there could be other factors too, right? Maybe some people are just trying out different investment strategies or finding new options that fit their current needs and goals.
You're absolutely right. There are always multiple factors at play when it comes to investor behavior. It's a complex puzzle. But one thing that's definitely positive is the sheer number of people investing in mutual funds. That record-breaking 22.08 crore folios is a clear sign that more and more people are seeing mutual funds as a way to grow their wealth.
It's awesome to see people taking control of their financial futures and getting involved in the market. And it's not just about how many people are investing, but also how much they're investing. We talked about that rising ticket size for equity funds, showing they're more confident in equities.
For sure, people aren't just dipping their toes in the water anymore. They're diving right in. They're recognizing that equities have the potential to really grow their wealth over time. This definitely aligns with what we saw earlier with equity-oriented funds taking the lead.
Yeah, it's a sign that investors are seeing the potential of equities to generate bigger returns over time.
But let's not forget those higher returns often come with higher risk. So it's super important for investors to know how much risk they're comfortable with and invest accordingly. A well-diversified portfolio can help reduce those risks while still allowing for growth.
So it's about finding that sweet spot, taking advantage of the potential of equities, but also managing the risk by spreading investments across different assets and styles.
You got it. Now, those sector thematic funds that were getting so much buzz, well, the report shows that the flow of money into them has slowed down a bit compared to their peak.
What do you think that is? Are people becoming a little wary of those more specialized funds?
It's possible. You see, sector thematic funds are naturally more focused, which can lead to great returns when those sectors are booming. But when things change, they can also be more vulnerable to downturns.
So higher risk, higher potential reward. Investors need to understand both sides of the coin.
Exactly. It's important to really grasp what's driving those sectors or themes and be picky about where you invest. The report also points out that a big chunk of the money going into sector thematic funds came from new fund offers, or NFOs.
Oh, NFOs. They always create a buzz with that promise of a brand new investment opportunity.
They sure do. But it's crucial to approach them carefully. Just because a fund is new doesn't mean it's a good investment. Always do your research, understand the strategy, the risk, and the cost before jumping in.
Don't get caught up in the excitement. Make sure it makes sense for your goals and your risk tolerance. Now, let's shift gears and talk about gold, specifically gold ETFs. The report says their AUM has gone down lately. What's behind that trend?
Well, gold is often considered a safe haven. People tend to flock to it when things are uncertain. But when the markets are relatively calm and other investments are doing well, gold loses some of its appeal.
So it's all relative.
Yeah.
Even though gold is still valuable, how much people want, it depends on what's happening in the market and how they're feeling about things.
Exactly. And it's worth remembering that gold still has a place in a diversified portfolio. It can help protect against inflation and add some stability when the market takes a dip.
So don't write off gold completely, but don't put all your eggs in that basket either. It's about finding the right balance of assets for your individual needs and risk appetite. So as we wrap up this part of our discussion, what are some key takeaways for our listeners? What should they be thinking about as they navigate the world of mutual funds?
I think the most important thing is knowledge. The more you know about the different types of funds, the strategies, and how the market works, the better decisions you'll make. Don't be afraid to ask questions, talk to financial advisors, do your research. There are so many resources out there to help you make sense of it all.
It's like learning a new language. The more you understand the vocabulary and the rules, the better you can communicate. And in the world of investing, that can mean making smarter choices.
Couldn't have said it better myself. And remember, investing is a journey. There will be ups and downs, but with a good plan, patience, and discipline, you can navigate those twists and turns and reach your goals.
It's about staying the course, even when the road gets bumpy. Now, before we wrap up our deep dive entirely, there's one more really fascinating part of the mutual fund puzzle we need to explore: the connection between fund flows, AUM, and how the market performs.
Join us in the final part of our discussion as we delve deeper into this web of connections and uncover some surprising insights.
Welcome back for the final part of our deep dive into the world of mutual funds.
We've talked about so much already, analyzing those fund flows, looking at AUM, and even exploring how investors make decisions. Now let's see how it all ties together and get a complete view of what's happening in the mutual fund landscape.
Yeah, we talked before about AUM changes adjusted for fund flows, to see the real impact of market gains or losses apart from new money coming in. But how can investors actually use that information to make better choices?
That's a really smart question. This adjusted AUM data is like a secret weapon for spotting good opportunities and avoiding potential problems. For instance, let's say a certain type of fund has seen its AUM grow a lot, but it's mostly because of the market going up, not because people are investing in it.
So it's like the market is inflating the AUM, but investors aren't really excited about that category.
Exactly. That could be a sign that that category is getting a little too pricey, and you might want to think twice before putting your money there. It's like a stock that's going up in price just because everyone's buying it, not because the company is actually doing better.
Okay, so it's a warning sign, a little yellow flag to slow down and analyze things before jumping in.
I like that. Now, on the other hand, if you see a category with strong AUM growth that's mainly driven by people actually investing in it, that could be a good sign. It means investors see potential there, even if the market isn't doing all the heavy lifting.
It's like they're putting their money where their mouth is,
Yeah.
getting on those categories for the long haul.
Yeah. But you still got to do your homework and understand why people are investing in those funds. Don't just follow the crowd blindly.
Always look for those categories with a solid track record, a management team you can trust, and good fundamentals. Now, I've always been curious about the link between AUM and how well a fund performs. If a fund has a huge AUM, does that mean it's going to do better? Or is it the other way around?
It's tricky. It's not a simple A leads to B kind of thing. A bigger AUM can give fund managers more to work with more resources and flexibility, which could mean better returns.
Like having a bigger pool of money to play with, right? More diversification and opportunities.
Exactly. But a giant AUM can also make it harder for those managers to move around the market. It's like trying to steer a giant ship takes more time and effort to change direction.
So it's a double-edged sword. A big AUM can be good or bad depending on the skill of the fund manager and how the market is doing overall.
Exactly. So in the end, the relationship between AUM and performance is complex. It depends on a lot of different things, like the manager's expertise, the fund's strategy, and what's happening in the market.
No easy answers, huh?
Yeah.
It all comes down to careful analysis, thorough research, and understanding how the market works. So as we wrap up this deep dive, what's the main takeaway you want our listeners to remember?
Remember that the world of mutual funds is always changing. New trends pop up, the market shifts, and investors change their minds. It's so important to stay informed, adapt to those changes, and always be learning about investing.
It's like navigating a constantly changing landscape. You have to be aware, adjust your course, and never stop learning and exploring.
Couldn't have said it better. And never underestimate the power of asking questions, getting advice, and doing your own research. Knowledge is your superpower when it comes to investing.
Well said. We've explored so much in this deep dive, from breaking down those fund flows in AUM to understanding the ins and outs of investor behavior. We've learned about the power of spreading your investments, the good and bad of different fund categories, and how the market is always in motion.
Remember, investing is a journey, not a sprint. You'll hit some bumps along the way, but with a solid plan, a disciplined approach, and a dedication to learning, you can navigate the world of mutual funds and reach your financial goals.
Thank you for joining us for this incredible deep dive into the fascinating world of mutual funds. We hope you found it valuable and inspiring. Until next time, happy investing.